Hello, everyone who is here in this webinar. This webinar is about HOAs, homeowners associations. Very sexy subject, of course. But if you are either thinking about buying in an HOA, you're currently living in an HOA, or you're selling, you will really need to know what that HOA package is all about. And the biggest challenge with that is obviously the big size of the documents. But before we go into that, I want to introduce our awesome people here today. Justin McNabb from KW Thrive and Noel McCord from Cross Country Lending. Why don't you introduce yourself real quick and maybe give a little snippet of your experiences with HOAs?
Go ahead, Noel.
Okay, thanks, Justin. Well, good to be here. Thanks so much for the opportunity, Marat. I'm Noel McCord. I've been doing mortgages since 2003, so 23 years. Wonderful years. Okay, they weren't all wonderful, but it's been mostly wonderful. HOAs are so interesting. Where to get a loan, as Marat, you and Justin, I'm sure understand from a personal level, and with all your clients, it's a lot. And so the HOA does add an added layer where now we need to review all those HOA docs as well. It's very doable. It does require the lender jump on that HOA doc package right away because that needs to be reviewed alongside all the other good stuff like the buyer's income, credit report, the assets they have to close. So we get them done. SB 326, the balcony inspection, has definitely added a new wrinkle to HOAs. But what I find is with great realtors and a great title and escrow team and hustling to get that big HOA doc package, we get the loan approved, we can close them timely. So it's nothing to be afraid of.
Hustle, right?
Exactly. Yeah. Yeah.
It is a lot of work. It's a lot of work to review all the documents once you get them. That's always one of the biggest overwhelming things I've noticed for buyers. So helping them through that. Yeah, I've been a real estate agent for 13 years in Santa Cruz and have helped a lot of buyers in and out of HOAs as they buy and sell. And yeah, it's like I said, it's a lot to work their way through. And so they can be wonderful. They kind of get a bad rap sometimes, but they can also be wonderful. They can sort of even out your expenses that you might otherwise have to take in sudden one-time events if you own a single family residence that's not part of an HOA. And so no one likes to get that bill every month with an HOA, but sometimes that's better than a big roof bill of $20,000 every
Yeah.
10 years or 20 years. And so they have some really great pros and then some cons and some concerns to be aware of. And I think we're going to talk about all those things today.
Exactly. And so basically, the biggest problem about the HOAs is just going through the paperwork, right? If you have a way to go through the paperwork and a way to systematically get that information, you're going to be educated, and that's what it's all about, just knowing what you're getting into, right? No surprises.
Thank you for using that awesome picture of me.
Yeah.
That's the determination that you need to get through that set of documents.
Yeah, and you have that. You have that tendency. Yes. And then by the end of this 30 minutes, you should be able to review the HOA package with that guidance and understand what's involved in it and how HOA can impact your budget and your future resale, because there's some crazy stories from our area about this. And then also able to spot the red flags, like what to look for that it might be an issue later on. And then we have a quick Q&A with real questions from real people that have had issues. And I'm just going to put this right here, the list of HOA documents, which is like all of these documents. And this is the reason why it is overwhelming, because there's so much. I have grouped them here just to break it down. Essentially is core governing documents, which are the documents, recorded documents, CCNRs, bylaws, articles of incorporation. Those are in the title and not easy to change. Then we have our financial and funding documents, which is reserve study, assessment information. And then we have operations and governance records and rules and regulations and meeting minutes. And then there are several documents about the insurance coverage, anything that has to do with litigation. And then the newer item, the balcony or exterior elevated element inspection report. That is in a nutshell, all of it is. But we're going to break this down. And we're going to talk about how they affect the buyer or seller, the person living in the HOA. So for restrictions, you would want to go to your CCRs, your bylaws, and rules and regulations.
Can I say something about that?
Yes.
You can kind of think of it about when you're moving into an HOA, you're buying into the health of that HOA, both the financial health and also kind of the cultural health of that community. And so a lot of these rules and regulations and how they interact together, that helps you to kind of get a picture of the things that are important there in the community and to make sure that you understand what's expected of you. So it's kind of understanding how they function. And then the other piece, which we'll look at too, is also the financial piece. But you kind of become an owner of that, and you do, and everybody owns it together. And so you want to really understand where those risk factors are.
Right. So we're looking at restrictions, financials, and the risk items. So the restrictions is something that you potentially want to do in the unit, but it is restricted. And those would be rental. If you some of the complexes have rental restrictions, use restrictions. For example, any kind of home business type of situations. Pet policies affect a lot of people, right? Maybe the first thing to look for if you are maybe a dog owner with larger dogs of certain breeds, for example, and that would be maybe even before you even go and see the property, you want to make sure that your dogs are allowed to be there. And then architectural controls means that if you want to do certain types of remodel, paint, exterior, those type of rules. And then smoking and noise, a big motorcycle like a Harley Davidson, that's going to make a lot of noise and it's not going to be welcome in the HOA. So, and then parking and storage assignment details is another factor in the restrictions.
Mm-hmm.
Another item is financials. So you would go to the assessment information, budget, and reserve study. And we're going to talk about that a little bit more. You want to take this?
Well, I was going to say, just in case someone doesn't understand assessment, what that means in the financial language. But assessment is just the regular monthly assessment. That is basically your HOA fee. In HOA language, they call that an assessment. And then there's also a thing called a special assessment where they can actually, if they're low on funds, they can require everybody in the community to participate on fixing whatever it is that they didn't have a budget for. And that meaning they can due funds from everybody more than just the monthly assessment. And that's called a special assessment. Just want to make sure everyone understood that.
Great clarification on that one. And then when you go to those documents, you're going to want to look for the monthly dues, obviously, total reserves held versus reserves needed, major projects planned in the next 5 years, and reserve funding plan. How is the HOA going to build their reserves for the repairs that they will need to do in the future? And there's several red flags on this, which is reserves under 50% funded, if there's lots of special assessments or large unfunded capital projects coming. And also the reserve study needs not to be older than 3 years old. And Noel, Justin, do you want to jump in and discuss the reserves on this a little bit?
Sure, yeah. And just so everyone knows too, the way that HOAs do their budgeting is called accrual budgeting. So meaning they have to look out forward, what are we going to spend over the next 30 years of expenses on maintaining this property? And then work backwards from how much do we need to charge everybody so that we have sufficient funds. If you have sufficient funds for every expense that's planned on your books, then you would be 100% funded. And if you don't have 100 expenses for everything planned out for the entirety of the future, then you're not 100% funded. Very few are 100% funded. I've seen some but it's quite rare. Usually there's somewhere in the middle. And I kind of look at it a little bit like a sliding scale of risk. You know, if it's less funded, then you're more likely to have a need for either raising your monthly assessments in the future or a need for a special assessment if they have some unplanned cost. If you're the more funded you are, the less likely you are to have those changes as aggressively. HOAs generally keep going up as inflation happens, but they go up. They need to go much more aggressively if their funds are low. So it's understanding kind of where you're at. And there isn't a hard, fast set rule, but generally speaking, this is a good rule of thumb. If you're less than 50%, you might be a little bit on the lower side. If you're more than 50%, you might be doing better than most HOAs. And they can get caught up in the future, but it's a process and that's just a risk factor to understand.
And what does the lender look in the financials?
Yeah, absolutely. So the lender really digs into, hey, like Justin pointed out, this prospective borrower of a mortgage wants to buy into this HOA. What is the financial health of this HOA? Are we doing okay or are we doing not so good? So the lender is going to look at reserves very specifically. They're going to say we want minimum 15% reserves within the HOA. Well, what the heck does that mean? It means, let's say you collect $100,000 a year in HOAs, you need at least $15,000 in that reserve fund. Now, to Justin's point, that is under 50% reserves. So that's really sort of the lender's minimum standard. That doesn't mean, hey, buyer, this place is really healthy. It's sort of just meeting the lender's minimum. But there's so many other wrinkles that go into that. So, Moret, you pointed out that list of all the documents that we need from the HOA, CCRs, bylaws, the master insurance for the whole complex, all that. The lender adds yet another document. We lenders love to add more paperwork. Well, this one, nobody has until we get it for the specific purchase transaction when a buyer says, hey, I'm going to buy this condo. The lender gets what's called the Fannie Mae Condo Questionnaire. It's 5 pages long, and it says things like, what is the reserve percentage? A really important question related to the reserves that the lender asks for is, are there upcoming repairs or projects that are not finished? Do you have future projects that need to be done? What we're seeing in this land of balcony repairs that we're now in since last year is a lot of HOAs will say, hey, we're fixing 10 different balconies, 4 are done, 6 are not. Well, then the lender says, okay, how much is that going to cost? Now you need the reserves to cover the standard 15% of annual HOA income, plus the additional funds for these proposed large repairs that are coming down the pipeline. So we'll look at not only that 15% sum, plus anything the HOA says needs to be done, we need to have funds for that, or like Justin alluded to, a plan for that. How are we going to get there? That can be acceptable to the lender.
Right.
And a reserve study is a separate document that gets included on all of those. And it can often be 20 or 30 or 40 pages long, and it's a lot of accounting documents. And it's one of the things that, honestly, it's really nice. If you end up having an accounting degree, it's really helpful in understanding those. But it's where we all are able to sort of be an extra set of eyes, but it's also not our area of expertise to look at an accounting document for a business and be able to interpret that to a buyer with 100% accuracy.
Right.
But we can be an extra set of eyes to look for red flags and problems.
And to that point, real briefly, Justin, sorry, Moret, if you have special assessments coming and you're getting a loan to buy yourself a new condominium, a property within an HOA, the lender says, hey, what are those special assessments? And they may well qualify the buyer with that future higher payment. So if the HOA is $500 today, but the condo questionnaire says, hey, we've got to crank that up to $800. The lender wants to qualify with the higher monthly HOA. So just be aware as a buyer, you will have to show income sufficient to cover the HOA today and that assessment that's being called out.
Good point. Good point. All right. And then the third area to review the documents is the risk and compliance in the HOA. And you would go to the meeting minutes, look at the insurance and litigation documents, and then the balcony cert. In the 12 months of meeting minutes, you're going to look for any disputes, or conflicts, maintenance issues, upcoming major projects, or costs, because that is where they're going to be discussing those future assessments, correct?
The meeting minutes are kind of where you get some of the juicy details. A lot of the
Yeah.
other HOA documents are sort of official reporting type documents or official rules and regulations. The meeting minutes are where you find out what's happening in real time. Most of the other documents lag behind a little bit. You might have a reserve study that's a couple years old. A budget might have been done 9 months ago, but the meeting minutes were required to get the last 12 months. So they're really important to find out what's going on, especially related to these three things: costs, maintenance, conflicts, legal issues that come up. Sometimes you find out about things before it becomes a really big problem in the meeting minutes.
Right. Awesome. Insurance summary. For that one, you want to look for what the HOA covers, what the homeowner's responsibility is, and the amounts. You want to, Noel, talk about the lending aspect of the insurance for the HOAs.
Yeah, absolutely. So it's an interesting one where a small number of HOAs will actually also cover the interior coverage. Most of the time, the buyer of a condo has to get what's called an HO6 policy. This is an addition to the HOA master insurance policy. That's the big expensive policy that covers the whole complex. Typically, you, the condominium buyer, need to also get your own interior insurance. So this covers your interior walls, your possessions, your flooring, things like that, where the HOA in most cases is covering the roof, the outer walls, the common areas, all that external stuff. Well, fortunately, an HO6 interior policy that most buyers have to get is a heck of a lot cheaper. You know, we hear these incredible stories about the cost of homeowners insurance out there.
Right.
You know, you buy a home at the end of Bear Creek Road, you might be paying a huge annual insurance premium. Thank goodness this is not that. Most interior condo policies, often we see them range from about $40 to $100 a month, not the much, much more you might see for a single family home. However, the lender also has to analyze the master insurance policy and make sure that the replacement value of the condominium complex, the whole darn thing, is covered by the replacement value in the insurance. So I'm not going to name any names here. We're going to protect the innocent on local condo complexes. But I'll tell you, we have seen condo complexes that had insufficient replacement coverage. And part of that, as you guys know, is labor costs have gone way up, materials costs are up, fire risk is perceived to be higher now. So we've seen condo complexes that had to literally crank up their replacement coverage on their master insurance in order for lenders to do conventional loans. So if the lender says, hey, the replacement value is not high enough, a conventional loan can't be done there. Again, protecting the names here, but we saw a recent complex fill in that gap, or in other words, get enough replacement value coverage to then become lendable by a conventional loan. So the coverage is really important from the insurance side.
Justin, you mentioned in the beginning, you kind of share the responsibilities and costs of the maintenance, and insurance is one of them. In our area, the single family home insurances have been going up dramatically and lots of changes in that area. So then condo is a little bit more stable as far as that goes.
Yeah, we love to hate on HOAs sometimes. It's a favorite pastime of people that live in HOAs. But it's there are some really good benefits. You know, when you own the single family home and the insurance goes up, you're the sole bearer of that additional cost. When the roof needs to be replaced, when expenses, maintenance need to be done, and every home needs it, especially in our area. We have a lot of older homes. There's constant cost of maintenance. And with HOA, that's sort of spread out among many people. It does mean you're responsible for it when your neighbor's house has an issue too, because through the HOA. But it generally gets spread out, so it's sort of normalized and stabilized, and you don't have as many single event costs, which is really great for planning budgets. So it has a lot of great positives in that way, but it's just good to know all sides of it, which we're hitting all of it.
Yeah, exactly. Litigation disclosure is you look for any kind of settlement notice regarding common area defects, lawsuits or litigation, threatened litigation, and potential impact, financial impact of any of those.
So I've had personal experience. I own an investment townhouse, and there was a lawsuit over decks that had issues with their surface waterproof surfaces, and it was not included in the HOA budget to replace those because it was a relatively new complex and they just had yet to add it to their accrual budgeting. And so they did end up in a lawsuit with the original construction company. They got some of the money, but not all the money. And the rest of it, they had to have a special assessment on all of us as owners to chip in to get that work done. So it's not super common, but it's certainly not unheard of.
Right. Not as
Mhm.
common as the other things, I think. Yeah.
Yeah.
Noel, do you have something?
Yeah, so to hammer further on the good old condo questionnaire that lenders love, one of the questions in there is there litigation in the complex? If yes, the lender gets pretty excited and, of course, wants to know all the details. That said, I think some people think, hey, litigation means no loan. Not the case at all. It's really about the litigation and the scope of the litigation. If it's litigation about construction defects, that can be a real problem. The lender is treating the condo as the collateral for the new mortgage. The lender wants the collateral, your house. For us, it's this emotional home. For the lender, they're kind of steely-eyed and like, okay, this is our collateral. What shape is it in? If the lawsuit is about poor construction, leaking roofs, things not working, and we've seen such a gamut of different things, that is trouble with the collateral for the loan. The condo has issues. That may well kill conventional financing. However, we've also gotten loans closed in those situations because the insurance policy had enough coverage to settle those issues and get them fixed. There was enough money laid away to get the problem solved. We have never seen that work if the specific condo, let's say they're buying unit number 2, and unit number 2 has a lawsuit about construction defects on that unit, you probably can't get a conventional loan on it. However, if you're buying a condo in a complex, the other side of the complex has some construction issues leading to litigation. If the HOA has the money to cover the lawsuit, the settlement, the damages that are projected, we can probably get a loan there. If the litigation is an owner tripped and fell on the sidewalk and is suing the HOA, not necessarily a deal breaker, as long as the HOA has insurance coverage to cover the scope of the possible lawsuit. Now, as you guys know, so many lawsuits take years and are really confusing, this big raft of paperwork, and nobody has any idea how bad it'll get. That's when you can see the brakes get put on a regular loan, and then you're looking at private money at high interest rates. So litigation is a really big deal, but the lender needs to really get granular. What is the nature of the litigation? What is the scope of the litigation? It's not necessarily a deal breaker for getting a regular loan.
Good, good. All right. And then the balconies. So this is a newer law and it applies to condominiums and with 3 or more units and that have elevated wooden elements of 6 feet or more. It does not apply to properties without elevated elements. So you could have a townhome or something, but that does not have those features. And then properties with elevated elements less than 6 feet above ground, some lower decking or something like that is made out of wood, or elevated elements made of steel or concrete. There's a law, SB 326, which makes it so that HOAs are required to do the balcony inspection. SB 410 makes it so that HOAs need to hand over those inspection reports to buyers and with the HOA disclosure package and to the owners of the unit. There was a disconnect. I think last year was a bad disconnect where HOAs were required to have that certification for that, but then they weren't giving it to the buyers, and agents were asking for those, and they was like, they don't have it. There were lots of confusion around that.
I'm super glad that we have 410 now because we were chasing them around and sometimes not getting them, and so this is nice that it should be set in the package now.
Lenders want that as well, right? So
Absolutely. Yeah.
yes. And then let's talk a little bit about what does a real estate agent do when handling an HOA sale and the documents. So real estate agents are not attorneys. Real estate agents are not CPAs, and they're not building inspectors. So agent's duty really is to review the documents and identify any material facts relevant to their client's specific situation. It could be as simple as the agent knows that the client has dogs, and then they could do that, make sure that the buyer can move in there with their dogs. It could have to do, they know that the buyer wants to use it as an investment property, and some of the HOAs have those restrictions around rentals, for example.
Yeah, I'll just speak from the agent side of things.
Yeah,
I look at the review of the HOA documents as something that we should be all be doing together, right? You don't want to look to your agent to review them and tell you the problems, nor do you want your agent to not review them, right? And not be an extra set of very valuable eyes on this, right? Even though we're not even though we're not an attorney or a CPA or anything, we have experience with these, and oftentimes more than our clients. And having a professional set of eyes, even if it's not a level of expertise that an attorney or CPA might look at these financial documents, we can certainly, along with a buyer and or seller, review these documents and really try and look for those extra red flags.
exactly. Then we have a Q&A with our questions. What are the real pros and cons living with an HOA from an actual homeowners? Justin, do you want to take this?
Yes, I talked a little bit about this before, but I think people that love to do their own gardening, people that want a bunch of space to run around, are gonna not love living in an HOA. But for those people that might be on fixed income, they want to have their expenses set. They don't want to have a lot of variance. They want to have someone take care of their yard space, right? Um, they want community nearby. They want the amenities that HOAs often have. There's a lot of really good pros of that. I find a lot of retirees enjoying HOA space specifically, right?
Hmm.
And even though they can fit for a lot of different people, for those reasons I just mentioned, they can be especially attractive to retirees. The cons just being that if there are risks that you're unaware of, there's going to be risks in all home purchases of all types. But the idea is to be aware of them. And the risk with an HOA is with all these additional documents, with all these additional factors that it can reduce your visibility to those risks, where you can maybe more easily analyze those on a single family house with a home inspector and your agent and all the appropriate professionals. With an HOA, you're relying on another body to take care of those things. And so it feels like sometimes your visibility is smaller and you're looking through a bit of a veil to try and understand what the situation is and get your best grasp on what it's like to live here. And there's more variables. Is my neighbor, am I going to hear my neighbor? Are they a good neighbor to me? And so that's kind of the pros and cons. But there is a home for everybody, and there is a situation for everybody, and you just have to weigh these things out as you learn about it.
Right. And then this last question here is the why do some people say HOAs are so bad? Are they really that powerful? It really ties into what you were just speaking about. So maybe some people will have this feeling like other people are making the decisions for them, and there's the rules that are stopping them from living like they want to live and do what they want.
They can be powerful. They can be powerful. I mean, they do have actual legal teeth to support and uphold their rules and regulations, and so that's all the more important reason to understand it. And usually, my experience is if people have bad experiences, usually with an individual neighbor, which you can have that anywhere, albeit they might be closer in a condo or townhouse situation. Or the other thing is they have often a problem with not being able to do something they want to do. And a real good thorough look at the HOA documents up front is really most of the time all you need. They don't change their rules that often, though they can, not that often. So really sort of just thoroughly reviewing everything up front that solves like 99% of all problems in real estate.
Right. And
So
then
true.
Noel, for you, from your perspective, when you're dealing with home buyers that are buying in the HOAs, you you look at it from the lender requirement perspective.
Yeah, the HOA fee is such a big deal. You know, a lot of people sort of have this grand vision of owning a single family home, no HOA fee. So I see a lot of buyers sort of overlook the HOA fee. As you guys know, those can vary tremendously. You can have a townhome that has a $150 HOA fee that covers the bare minimum. You can have a condo complex, you know, across the street from me, the Seascape Condo Tells. I think they're up to like $1,400 a month in HOAs. So you have a huge range of monthly HOA costs. HOA costs, in my experience, don't go down. They tend to go up over time. So, really important for the buyer to know that. To Justin's point, you know, they're mowing the lawn for you, they're taking care of the exterior and the common areas. If you're a retiree, if you're somebody who doesn't like endless to do lists of working on your back 40 of your large single family home, that HOA fee goes to things that are very important to you. It maintains that property you live on. So, you know, when I'm talking to a buyer, it's, hey, here are the pros and cons, like you guys alluded to. Be aware of that HOA cost that typically will go up over time. Like we've touched on, if there are special assessments coming, big repairs, roof repairs, balcony repairs, let's be aware, Mr. and Mrs. Buyer, of what those future costs are. Because, like you say, you're part of a community now. You're buying into a group. What is the overall momentum? Where are you headed? What are the costs on the horizon?
So if you do go over the documents carefully enough, you should not get burned later, right? Can you think of any scenario where a complete surprise?
Yeah, it does happen, just like you have
Yeah.
surprises in any property from time to time. Like I mentioned before, you know, mine, the one that where the building materials at a later date were realized they were having
Yeah.
issues, right? Anything is possible. I've seen HOAs where maybe they have an old retaining wall, and the retaining wall wasn't on their in their budget. It's really difficult sometimes to think of every single possible thing that where an expense could come from, and they do their best. But
Mhm.
sometimes they come up with something that's, oh, we didn't think of that.
Yeah.
Yeah,
Yeah,
yeah.
exactly.
Also, one other quick thing about all these documents. If you have part of an HOA that's well managed, well organized, a larger HOA, getting all these documents up front is going to be pretty much guaranteed. It's required by state law. Although I've sold a lot of homes that are part of very small HOAs, little infill projects where there's 3 or 4 or 5 or 6 homes. Or maybe they're self-managed and they don't actually keep records of all these things. That's a whole nother topic, but it is sometimes a case. And it can be difficult to get these. And sometimes when it's a self-managed HOA, it's a whole different experience of understanding those risks that are there.
And that's why you need to talk to Justin McNabb when you're buying that because I say this really honestly. I think you are one of the most diligent agents as far as this type of stuff goes. One of the smartest, and Noel also just smart people on your side when you are buying properties and you need that. You need that. You don't want to an agent working for you that's not going to have your back. And I know Justin is going to look for your best interest in these type of scenarios because there's a lot to it. There's a lot to it. And here's Justin contact information. What's the best number to reach you, Justin?
That one right there, the 334-4727. That's my only number.
Perfect. And that QR code goes to your website. If anybody wants to get in touch through that. And then we got Noel's information here. So you're a lender, and is this the best number to reach you? 252-6635?
Yep, and I'll add to that. That's actually 252 Noel. So that's an easy one to remember.
Oh,
And I'll add that I've worked with Noel many, many times, and one of the things I love about how he works with our clients is I know that they're going to have a good grasp on what's happening. I know that he's going to explain things well. He's going to be proactive in the process. One of the last things you want is to be surprised by things in this very
yeah.
complicated real estate transaction, and Noel really reduces the chances of something like that happening. And I love working with Noel specifically for that reason. He's just really on top of it.
Yeah,
Thank you,
no
Justin.
shortcuts. You just
Yeah.
really gotta get the job done right, right?
Yeah.
And then here's my information. So I've been doing it for over 20 years, helping lots of home buyers and sellers and coaching lots of agents as well. So have that aspect to it, and currently working as a managing broker at KW Thrive Santa Cruz. And I am totally thrilled to help anybody either connect with Justin or Noel, or buy or sell real estate in our area and everywhere. I do referrals everywhere in California and in the whole country.
Yeah.
And then I have a quick disclaimer. So this has been for general information and educational purposes only. It is not financial, legal, tax, or other advice. I don't think we touched too much on that. And if you are currently working with an agent, have a listing agreement or buyer broker agreement, this is not a solicitation for your business. You need to go and talk to your agent. All right. Thank you, guys.
Thank
Thank
you.
you. Appreciate it, you guys.
Awesome. Have a great evening.
You too.